Good afternoon. Welcome to OptionsTender. This is a members video. We're taking this on Monday, Inauguration Day, MLK Day, January 20th, 2021. The market is closed. We did have a little bit of market action on the futures going through last night. And so I'm going to show you what I chart futures, the cash indexes, and also the ETFs. But I mostly do the analysis on the ETFs because it's translatable to trades, most retail traders. So today I'm just going to go through a quick analysis on the 4-hour chart because that's the closest interpretation when it comes to indicators and whatnot to the hourly or 65-minute charts for the ETFs, if you didn't know that. Okay. So we're going to do that. And then we're going to talk about some requests. Cremata, thank you for asking if I do a video today. And this is just for members, so I'm not going to release this to the public. And we'll talk about some of those hedges and the Tesla hedges, see if they play out or not, or what if this happens, what do we do? And if this happens, what do we do? Okay, so let's jump into it. We have the VIX futures. This is VX. And you see, I just want to show clearly we're triangulating. We're looking into this being a coiled up spring. And if this clear trend line holds, which to me, we're there. So do we, does the VIX start moving up as soon as tomorrow? That would be bad for the market. So we'll look and see what happens. And this is going to coincide with some other charts that we're going to look at. And so I just want to give you a visual of the VIX. Now, the VIX futures doesn't always move coinciding with the VIX itself, okay? They kind of mirror each other in a certain way. But there's times when the VIX will be up 5% and the VIX futures aren't moving at all. And just in case you do play like UVIX, UVIX, I do have some calls on that ETF for the VIX. This is what it tracks. It tracks the futures. It does not tracks the regular VIX, okay? All right, and for ES, so we go over here, ignore these are GAN levels, and that is the work of Plus Fuse, I want to say, Plus Fuse 3. It's a YouTube that I follow. So I have these on here. They've been on here for a long time, just kind of track. And again, another thing that I'm considering starting to learn. Okay, so I'm not going to talk about these. It's not my work, but I will, leave them on there if we happen to see price moving off of them or around them. So here's what we're focused on, and that's the possible bull flag. And then I'll show you the two different ways that we're looking at it. I did post it in the Discord, but at this point, a visual, traditional technical analysis, this is a flag. This flag can break out. This flag can break down, okay? It has, for example, we're looking at that being a bull pennant or flag in itself, okay? And if you remember the analysis, if you've been with us for a little bit, you knew that we were looking for another target up top here, okay? And price ended up breaking down. We were short from these positions, but we had hedges to the upside because we said, hey, this could have one more move up, okay? So that's a micro way of looking at this also. All right, we talk about the SPX being at those historic trend lines up above. And yes, price can definitely go tag those trend lines again, but our probability is to the downside at this point. It highly to the down point. So just like this had a flag action here and we could have gone up, it ended up breaking down. Same with here. It could be a sell the news situation going into tomorrow. So we have to be aware of that. Right now we're at that channel top. And so at this point, I don't think price is going to move directly up. So here's how we're looking at it. Going to this board, we notice that this is the bearish scenario. I have this as a wave 1 from the beginning, and then an A, expanded B into a C. That would make sense for if this is an A, B, C for the bulls, but for the bears, I have this being 1 and then A, expanded B, and not expanded flat, excuse me, a running flat, because we're not going to make a new high here necessarily. If price does go directly up to the 61.17 here, that would be an expanded flat because we made a new high over A. But if we're retracing from this point, which is a very good 62% golden ratio retracement, and that's from the bottom of wave 1. Notice that we didn't go to the bottom of B. Okay, there's other ways you can do this, but this seems to make more sense. Where 1, you have the running flat, and we're right back into that golden ratio, rejecting off of it in confluence with the channel top. Okay, and then we reject from there. Now, the reason why this is confusing is because in the C wave of a correction, you have an impulse wave. And I believe this is an impulse wave. You have 1, 2, and then a lower degree 1, 2, 3, 4, 5 to complete the 3 wave, and then another 4 and another 5. Okay, so this is a 5 wave move impulse, and whether you're bullish or bearish, this is complete. It appears to be complete, and now we're looking for either a new low, and if this is a wave 3, we're probably, this, when you go to test lows, you still get reactions. So it's going to keep the bulls and bears guessing until we actually break out of this consolidation. I know it appears like it's more to the downside, but this is really just a zone, a consolidation zone. Okay, and looking at the other point of view, here's the bull interpretation. Either way, we're looking good for some shorts going into this short week. All right, where this is not the top, we have our A, B, C for B. We have our C, and that's correction complete. Now we have an impulse wave, and just like the bulls or the bears, we're looking for retracement. And this, they call it testing the lows. Even if it only makes it to here, it's still testing the lows. All right, so, and this can come all the way back to the 786 and still be healthy, okay? So 1, 2 setup, and as long as it doesn't crack the lows here, it's still valid to the upside, okay? If you're bullish, you're looking for a 1, 2 setup, and you're looking for wave 3 to break the highs up here. All right, so you see how we're going to get this equilibrium again. And it's looking to confuse people. So maybe we get an inside week coming up. I don't like to say that. I would like to see this work its way out, either way it goes, but we'll have to see. All right, going to NQ. Virtually the same thing, but in a traditional technical analysis, we're looking at this being a corrective and a breakout, okay? So we should see some relative strength in NQ in tech, because this should backtest and continue on if it's bullish. If it's bearish, it's going to break through here, and it should be a fake break. The flag broke out, fake break, and headed lower, probably faster. Okay, and like we've been talking about on the small caps, we're looking for a relative weakness in tech, and that has to do with the bonds really overall, but we're not going to get into that now. We've been talking about it. The small caps, you see with the bonds changing its direction, the small caps are going to be relatively stronger. Even if that's to the downside, the small caps will probably not move as fast to the downside as tech. All right, if we're bearish, tech is going to drag us down, and small caps are going to be relatively stronger. If we're bullish, the small caps are going to rip, and tech will kind of just be dragged along. Okay. So that's that scenario. And here is my scenario for RTY, the small caps. I'm looking at this being a down channel, so which is bearish. We're still in a bearish setup. But in the near term, on a 65-minute range, I know we're in the 4-hour. This is still bullish. But what I notice here, first of all, we haven't made it to any downtrend lines. This channel was drawn from these 2 points at the bottom here. So this is a potential channel because we don't have but 1 point up here. Okay, and this is going to be our downtrend range at this point. But what we have here is we have some sort of wave, a correction, and now we're getting an extension because you have a 1, 2, and it looks like it's just not finished. Okay, so going into tomorrow, I wouldn't be surprised if we're seeing small caps not only maybe get rejected off of here, but maybe even making it up to the top of a channel. And both those levels coincide perfectly with, not this one, with this. All right, so you have that double down trend line that I drew. It's more of a range into the 50% retracement. That could be the area where price stops there. But if it gets above those, that potential channel top would be that 62% retracement. And I think that's very likely that we see just a push, a rip push, showing strength for the inauguration and all the policies and this and that. But I think that's going to be a false move. And I think this is a retracement from this entire move. And we're getting possibly an A, a B, and 1, 2, 3, 4, 5 into a zigzag, which would be a 1, 2 setup, bearish to the downside. Okay. Now I know what some people are thinking, and that's, hey, well, you talked about the bulls having the ball on SPY, and we'll go back over through that. But just know that in the monthly time frame, I am bearish. Clearly, I've been saying it over and over, but I do have to watch out that we don't make new highs, and really, the formation is favors the bulls in that sense on the daily time frame. Okay. All right, so let's go ahead and start talking about. We'll start on Tesla. And let me change my screen here. Okay, so we're looking at Tesla here. Supposedly have a breakout, but what if this is just another beginning to an ABC? ABC for a larger degree A, B, and a 5-wave move down for a C. I think that's more of a likely situation. I'm not going to go through the whole entire charts, but we've been looking for this to be a 1, 2. We got our wave 3, and I think wave 4 is going to be larger, okay, because and possibly even cross down here. I know we talked about that. I don't think the price is going to get down to these levels at 220, 275, but I do think there's going to be a larger move into this price range here where there's some volume, and that would be the lesser degree wave 4. Okay, so that makes more sense. We never reached that point. We did have a descending triangle. I don't think that's the formation anymore. So I do think price gets down, possibly even to close this gap down here at 322. Okay, so but what are we actually talking about? We're talking about, let me bring up the Discord up top there. So we're really talking about the Tesla hedges. All right, Tesla hedges, they're going to prepare us for the upside. Now, if we have any more room to the upside and Tesla wants to get us there, in the futures, we have a couple points up here. We're looking at this, I think, two different ways. So if this continued just a little bit higher, I think we have some room to go, and these might work out. This might be an A, B, and then we're looking at some sort of 1, 2, 3, 4, and one more move up to 5. That would be an ending diagonal there, with the waves crossing like it is. Very, very corrective type movement. If it's not corrective, then we're really, really nesting here, and it's a 1, 2, possibly 1, 2, 1, 2, 1, 2, and then we just have so much higher to go where it should go parabolic. So if that's the case, then we're already starting our move to much higher ranges, and we can't even see it if I don't. Our much higher ranges up here, not only to complete the 500, but there's a 600 extension up there, and we're not going to go over that. So 500 would be our first target, and then I believe 600 would be our next after that. Okay, so more realistic, if the market is going to make these new highs, new all-time highs, then this should follow that path. We should get new highs up there. This should be just a parabolic move, probably a last gas extreme move. Okay, this didn't work out that way, but I think it's more likely that maybe we just eke out one more new high here to 444. Okay, and this would be an A, a B, and we're looking for the ending diagonal. So that's 3-wave move up for 1, 3 down to 2, 1, 2, 3 for 3, and then 4, and we look for 1, 2, 3 into 5. That, depending on the measurement here, it could go up to 463 as long as wave 3 is not the shortest. All right, and we don't have that much time to go through all of that, but here would be our 2 targets, 444. So go through that in your own time. If 1 is longer than 3 right now, then 5 cannot be longer than 3. Okay, and that would give us our B wave. Let's assume it's just a 444 right now, and that would also bring us into some time and price targets right here going into this week, and we're looking for lower prices at that point. Now your projection could be an A, where C equals A, and we'll give that in another video. Okay, if price starts to break it down, we'll have these lower prices I showed you on the traditional sense where it should go, but there should be some targets on Fibonacci's as well, where there is probably a 100% extension or all the way to the 1.62. All right, so your question is, how much room on the upside really do we have for this? And that's 20 points to the upside or 60, or excuse me, 40. 20 or 40 points to the upside really is our range. So I'm already out of them because we had a nice move, and the price that I was looking for already, it automatically went through, a little bit shy of that 62% retracement, but I don't think it goes straight down from here. I think, I think there's some unfinished business there. So all right, now we're looking at also with SPY, and I'm going to play around with this because, maybe we can get a channel here that equals that same, just like we did in the futures, where that channel, we're possibly already at the top of it. All right, so that's a possibility right there, that we're already at the top there. But if price wants to ignore this, because we're just kind of drawing this out just now, our prices, maybe it spikes up into tomorrow with the small caps being so strong. So we have maybe 599, 600 right here, but then we're looking at about 602, just underneath would be the downtrend line from these 3 peaks here. Okay, now with those 622 hedges, that's exactly what we're going to do. We're going to leave them as hedges. So if they go directly, if the hedges go directly to 0 because price just ends up falling so fast, we're not going to really worry about getting out of them, getting what we can out of them, because we want them to, just in case this gapped up 2-3% because of the inauguration. That's what we were worried about, is just this massive gap up. Then what would we do with them then? Well, we'd let them kind of play out and shave off some of the profits as we go. So we have the 786 right here at that downtrend line that I was talking about, just under 602. I would take half my position off of here. And then if price went higher, I would take half off at the 605. But as of right now, price isn't really doing a whole lot. Looking at the futures, we'll see what happens tomorrow. But I think it's more likely, and this looks like it's unfinished too. So 1, 2, 3, 4, and maybe 5 up here. We'll see. Or this could be a 1, 2, 1, 2, 3, 4, 5, 4, 5 to where this is complete. And I think that looks more like the futures. And so if we go directly down from here, we'll look at those retracements. Clean some of this up. We'll look at those retracements. And what we'll do is we'll look to add on hedges as price retraces. I think the 50%, I need to clean this up. I think the 50% retracement is where we will look to start adding lightly hedging to the upside, okay? As price falls down here, we'll look for the 50% being the first point that it could stop at, but it's more likely that the 62 and the 78.6 is going to be the zone where price really starts to get some buyers into it. Plus, we'll probably close a gap. There's some things happening here, okay? So this is where I'll call this huge zone here. This is where we're going to layer into some calls to protect the profit that we make, because we're heavily short. So price moves down to these levels, and especially if it moves quickly, we're going to have some nice profits to protect, okay? If price wants to continue just to drive down, great. Those hedges will end up no good, and we'll keep profiting. Although we slow our profit at this point, if we break these lows, forget about calls, all right? We break the lows, forget about calls, unless the indicators show a positive divergence, and then something else might be happening. But we'll make some money on the way, and then we'll talk about it later, okay? Now, if price ends up just going straight up from here and we take some profit, we'll be adding on some puts here at 602. Not likely that we'll add on more puts here at 605, but this is such a good zone to where price needs to hold on to that 786, and then we might see new highs at that point. But this will be another critical level here at the 602 to where I think it would be an objective short again. And that, once again, I think is a 1-2 setup, and we have wave 3 headed down there. But I think it's more likely that we've already had our move and we go retrace. So I hope that clears that up. Now, the 2-4 puts that we have, the February 14th puts, there's 2 sets to talk about. Okay, so the February 14th, that's what we would want to add on to. If not, at this point, at the 786, I might layer into a few sets of puts, all right? I think this is bearish. I don't think we're going to make new highs, but I want you guys to know that there's a more bullish bias situation, since this looks like an A, B, C correction. Okay, I know I've been doing this for a long time, and they want you to, because every single time it's bullish, they want you to think it's bullish again too. Okay, and we have 129 puts as well. Well, just know that we have, on the daily time frame, we're looking at a cluster right here at about 126 to 128. And I think that might be, whether it's a high or low, I think if it is a low, those 129 puts are going to already be in the money, okay? They're already going to start making some money. I don't remember how far they are out, to the downside, but I think they will be just fine, and I think this will be a larger move. down into the levels that are at the 560 level that we've been talking about. So in this range, I think price will already be down there. Okay, so I think 129 puts are they're great. I think anything out past that level are great. And what I'm setting up for is the for the February ones is just in case. Here's the February levels. All right, time relationships. Just in case price makes it further than we think and it starts to just really crash and burn, I want those February 14th ones in place already. I don't want to have to roll out every position. I'll roll out some, but I want those to be established as we go a little bit higher. And we're already adding them. But after that, I think 214, and then maybe the next 221 will be a good spot to roll some things into that are near dated. All right, because I want to capture that entire move. If this ends up being something that's very volatile after it breaks down and then gets a big bump here and then heads lower, we'll have to play a little bit different. But what if it continues to just kind of rip to the downside? I want to have all that available. So that's why we're at 214 already. All right, I hope that answers all the questions, you guys. That's what I got for you. Thanks for watching here at OptionsTender. Have a wonderful day, and we'll talk to you in the next video.